Charlie Munger's back at it again, not for the first time, but the second time this year Charlie Munger has purchased Alibaba shares. After almost a decade of no movement whatsoever in the portfolio, Charlie Munger has added twice this year to Alibaba. If you haven't been paying attention to what's been happening with Alibaba shares in the open market, then I commend you and applaud you because I believe that that is the correct approach. But basically, Alibaba has been having a pretty tough year as far as the share price is concerned. Alibaba shares are down almost 50% in this past year. And despite all that, Charlie Munger just doubled down on his position in Alibaba. But what's the significance of this move? In light of these changes, I wanted to discuss why I think it's important that Charlie added so much to his existing Alibaba stake. I'll also cover the actual portfolio change for the quarter. Okay, first let's discuss what the significance is of Charlie Munger adding over 80% to his position in Alibaba. Some investors are probably breathing a huge sigh of relief, especially if they followed Charlie Munger into Alibaba. There have been non-stop negative headlines coming from Chinese tech companies and regulations in China. So why the heck would Charlie Munger almost double his current position in a seemingly troubled company? Well, I think understanding Charlie's philosophy will really give us some clear answers about that question. Any student of Warren Buffett should know that Charlie Munger is responsible for teaching Buffett that buying a wonderful company at a good price is much better than buying a good company at a wonderful price. So Munger is basically looking for wonderful companies. And as I mentioned earlier in the video, before his first purchase back in the first quarter of Alibaba, there wasn't any portfolio activity since 2014. So Munger has no problem doing absolutely nothing in the portfolio for years at a time. So if he can't find a wonderful company at a fair price, then he's not going to do anything. Another core tenet of Munger's approach is that he wants to be extremely concentrated in a handful of wonderful companies. He's been quoted as saying, "The whole secret of investment is to find places where it's safe and wise to non-diversify. It's just that simple." In addition to that, his first stake was 20% of the Daily Journal's portfolio. And a few quarters later, he has now almost doubled the stake after it had decreased in market share to almost 20% of the portfolio once again. Another core belief of Munger's is that the current share price of a company does in no way necessarily reflect the intrinsic value of the underlying business. With a few of these core tenets, we can start to put together a picture of why Munger re-upped on his position. First, he has seemingly found, in his opinion, a wonderful company that has high returns on capital. Number two, it's clear that Munger thinks that this company is trading at a fair price, if not a wonderful price. So he's getting a wonderful business for a wonderful price. And number three, he believes in this idea so strongly that he was willing to double down even though his position has been almost cut in half at this point. It's clear that Munger doesn't give a damn about any of the headlines about China or Chinese companies. In fact, Munger is a pretty big admirer of the growth of prosperity within China, and rightly so. So it doesn't seem that Munger is too concerned about regulations concerning the VIE structure or potential delisting of Alibaba. He doesn't seem too concerned about any of the anti-monopolistic regulations or potential common prosperity investments or donations on the behalf of Alibaba. Simply put, Charlie finds it wise to not diversify out of Alibaba and actually continue to add. The mainstream media's thinking and Charlie Munger's independent thinking necessarily do not match, and in this case, they clearly clash. Both Warren Buffett and Charlie Munger share the sentiment that when they see a fat pitch going right straight down the plate, they're going to take a big swing and hope for a home run. Now, I understand that Munger's personal stake in these shares of Alibaba is not that significant compared to his overall net worth, but he is investing on behalf of his shareholders, and it is his duty as chairman of the Daily Journal to invest their money as if it were his own. Whether or not you agree with Charlie's move, it's still worth paying attention to at the very least. We can ask ourselves questions about the business. Have our assumptions changed in any way? Have the underlying fundamentals of the business changed at all? I believe if I were able to ask Charlie, his answer would be probably not. So to sum this all up, despite the extreme decrease in share price over the past couple quarters in Alibaba, Munger still believes that the risk reward of this situation is the best use of his capital at this time. Munger is nothing if not rational. So to evaluate the opportunity cost of this compared to all of the other stocks that he could have invested in, it is a pretty clear indication that he still really believes in the future of Alibaba. Not to mention that it's probably grossly undervalued at this point. Munger only swings when he has rationally evaluated the pros and cons of any situation and thinks that the investment case will come out in his favor. I really wouldn't be surprised to see Mohnish Pabrai add more to his shares in Alibaba because, of course, his position has decreased over this past couple quarters as well. So he has been adding for the past 2 quarters, and quarter 3 is probably going to be the same thing. He wants to get that position back up to a 10%, assuming he agrees with Charlie that the underlying business has not changed. Speaking of other super investors cloning Charlie Munger, I might not be shocked to see Li Lu re-enter Alibaba at this price point. It's probably such a tantalizing value at this point that even Li Lu might be interested again. And who knows, Guy Spier, the notoriously cautious investor, might add a little bit to his stake. It's not as big as Pabrai or Munger, but he may be willing to take another swing at this company. That, of course, is all speculation, but there are certainly admirers of Charlie Munger's philosophy and approach to investing, so there would be no surprise over here. At the very least, we usually know why an investor buys a certain position, and that's because they think it's undervalued. At the end of the day, Alibaba might be undervalued and it might not be. It depends on how real the risks are and if the risks are real or perceived. But I think now it's pretty clear what Charlie thinks about the risks. I've got a video over here if you're interested in learning a little bit more about the regulations going on in China. So here we have a wonderful company trading at least a fair price, with rationally calculated odds of the investment actually turning out well for Munger. This certainly isn't a recommendation to buy Alibaba stock, or if you already own it, add more, because there are certainly risks with any investment, but particularly this one. But at the very least, we can take some of these data points from Charlie's philosophy and combine them to come up with a pretty clear picture of the idea that he probably still believes in this company. Some people might be calling Charlie senile or out of touch with what's happening in the real world. Or maybe we're seeing the tried and true Charlie Munger going through the same exact waves of emotion and turmoil that he's seen throughout his entire career. I can't say whether or not he's right, and he can't say whether or not he's right. But it seems like he thinks he is right. So that's a little bit why I think this move actually matters for Munger. But let's hop over to the actual portfolio and look at the specific change that he made. Here on Dataroma, we can see that Alibaba makes up about 19.86% of the portfolio, and the recent activity indicates that he added 82.71% to his existing stake. Now, of course, that stake was almost cut in half from the previous buyback in the first quarter of this year. The quarter started on July 1st. So Munger bought this stock anywhere from $221.87 per share all the way to the end of September to $148.05 per share. You can also see that the market cap for the company is now at about $424 billion. And when he first bought into the company, I think it was somewhere around $650 billion. So that's a pretty big range. At the beginning of the quarter, the shares were priced at about the same price that he took his initial stake in, around that $225, $230 mark. Well, that's just a guess based on the lowest price of the first quarter. But if Charlie was able to bottom tick this at about $150 per share, he is getting a huge discount on a company that he already had a lot of confidence in the first place. So when the market gives Munger these softballs, his only reaction is to swing for the fences. Now, it certainly would have been concerning for Alibaba shareholders if Munger had actually sold 80% of his stake. That would be a clear indication that he no longer has high conviction in this company, because it's either he's pretty much all in as one of his few positions reserved in his portfolio, or you're basically completely out. This is just another example of Munger being able to sit through perceived market turmoil and simply, in his opinion, take the right action, which is to add to a company that he believes is a wonderful business. I mean, it's pretty much that simple. If the market gives you an opportunity to buy shares in a business that you love at a lower price than the last time you bought it, then Munger's going to take that bet 10 out of 10 times. I share the opinion with Munger that the underlying business probably hasn't changed that much, even with all the headlines and regulations, so I am personally comforted to see Munger make this move. I quickly want to go to the activity tab over here on Dataroma, because looking at Charlie Munger's tab is pretty much the shining example of how I'd like to manage my portfolio. He's made 3 moves in the past almost a decade at this point, and I think that's just a fantastic approach. Munger is not eager at all to swing, but in this case, he's found 2 opportunities in the past year to buy the same company up. So all in all, it looks like Charlie Munger definitely still believes in Alibaba's business and probably thinks that the outcome for him as an investor and his shareholders in Daily Journal is going to be in their favor. Like I said before, Munger is getting the opportunity to buy a wonderful business at the very least a fair price, if not a excellent, wonderful price. Only time will tell if Munger is falling prey to hubris or the inability to know all of the unknowns that are out there regarding Alibaba, Chinese government, regulations, anything of that nature. I, for one, believe that Charlie Munger is one of the most rational human beings probably on the planet, and I admire his decision-making ability above almost anyone else's. I'm not saying that everybody else is wrong and Charlie Munger is definitely right, but I will say that I very much pay attention when Charlie Munger makes changes. If you want to learn more about Alibaba, you can check out my video over here where I discuss the core business of Alibaba with Frank Tabor. I also have a video over here where I discuss Tom Rousseau's opinions about the regulations in China concerning the tech giants like Alibaba and Tencent. Thank you so much for watching this all the way to the end. Please like the video and subscribe to the channel if you enjoyed this. I really appreciate your time, and I will see you in the next video.